This is Gold FX Trader, living a dream. Alright, enough jokes. So with that introduction, yes, we are living a dream and we're talking about gold. Gold, gold, gold. That's all we're going to talk about is gold. Making gold. Gold, gold, gold. Gold has been here for a long time, so it's a good pair to jump on, especially we got the opportunity to use a broker. That will benefit yourself, right? Whether you're in the US or wherever you're at. This is a broker where you don't really have to worry too much because you're not going through a broker because you're trying to get through FTMO. It's going to be a special demo account, right? So you don't need to worry about, deposits, withdrawals, nothing. No, it's just all through FTMO. They're just going to copy your account and you just got to get used to the broker, which pairs you can trade, like gold or silver or Bitcoin and all that good stuff. But you know what, I'm gonna focus on gold because all these rappers, they just wear gold, right? Yeah, how people want to show that they're rich, they flash their gold. It's all about gold. Come on, guys. Anyways, so with that being said and done, I want to share something with you guys special, something that I really was doing some back testing today, researching, just kind of always trying to get better, right? Every day you try to get better, try to learn something new from the market and what it's willing to share its information with you. And so it's up to you to research and diagnose and how much you want it to go. So with that, we're going to look at gold at 5-minute chart. We're not going to look at the 1-minute chart no more because there's the new mentality that we want. And that mentality is that we're not going for short, we're going for long. We're going to set a reasonable stop losses and we're going to hedge. And this is my gold hedge to the edge. It's a really good thing that I was able to identify. I would just like to share that with you, and we'll use TradingView to display that. And go from there. So with that, how we start is that when the market opens, for my time, again, I'm in the US. So when the market opens, we're going to first identify, okay, where does the price go to, and then retrace. So the price went to about the 15, 54, 59 price, and then it retests the previous highs, but we don't care what's on the left side at all. We're just looking at exactly from the blue line forward to the right. So here we identify. So down here, depending on where you're at, the idea, okay, let's just say scenario wise, we're gonna go ahead, this is gonna be real quick, it's not gonna be long. The idea is that, let's say the entry was there, right? This engulfing. Maybe you got in halfway through the engulfing. The risk right now may be here or not, but let me try to see if I could pull up. No, that's not it. Let me see if I can pull up. Actually, yeah, we'll just stick with this here. So with that being said, we're gonna our entry is here, our stop loss is there. So kind of go through my notes here. So draw support resistance lines once you have about 5 to 10 candles. So this is about 5-ish candles. Then we go here, watch the price action, wait for the break and confirmation to enter. That's this engulfing here. All right, let me get so that's this one here. Oh my gosh, that's horrible. So I'm not an artist even with my mouse. There you go. And then go to the upside. So we're now, when price reaches this engulfing here, we want to move our stop loss now to break even. Oh my goodness. Oh my goodness. Come on. Stop playing me. Okay, anyways, moving this stop loss to break even. And now we're gonna try to identify where the high is, right? We're just trying to play with the market to identify, okay, where's the high, where's the low, and how we can swing it throughout the day. Because technically in gold, on a funded account, you can only trade it 23 hours, because the 24-hour, there's a rest between an hour break between when the market closed and the market opened. Even I know a lot of pairs at 24/5, which you could trade consistently throughout the week with per FTMO's guidelines when it comes to holding trades. However, you can't hold through the weekend. So with gold now, you have to be careful because it's only 23.5. So 23.5, there's that 1 hour gap that you technically have to get out of the market. Otherwise, your account will be voided when you trade the live account. So, sorry, not live, the funded account, special demo. So with that being said, now we're going to keep playing the trades here. And we're going to watch it, right? So at this location, now what I'm going to do is I'll say, okay, that seems like a possible high, right? But we're going to manage our risk. We're not going to put our stop loss too drastically. So it's going to be a really tight stop loss, because the idea we're trying to hedge, trying to identify where the top and the bottom, where's the market going to swing. If it swings to the top, we're going to be able to break even if it goes back to our initial, let's say we sold it, right? So we sold it, market came down, set a new low, and we saw that the market was not going any further. So we put a buy position and set stop loss, but we moved the sell position to break even once he sets that new low. And then once the price from the sell side is reversing, we take a trade with the reasonable risk. And then with that reasonable risk, what we're gonna do is now, I think I need to draw it for you guys just to make it more sense. So for example, here's a chart, right? The highs and the lows. Let's say, price went up to here, consolidated. So let me just draw now. Consolidated here. So now I put an entry. We're going to enter here, right? We're entering here, and then our stop loss is going to be somewhere right here. Let's make that red. Where are you? Okay. Make that red. Okay, that's a stop loss. And price shoots down here. Say it breaks this area here. Consolidates. Let me get my paint. Consolidate here. Then we're like, okay, that seems like the possible low, right? Where market's at. Right now we're still trying to identify the market. We're letting the market do what it needs to do, and we're gonna just run with what we can. But the point here is trying to be patient. I'm just trying to, with the minimal time, I'm just trying my best to explain to you guys, and you guys can replay this countless of times, and hopefully I can try to slow down, but you get the point. So with that same concept, right? We're gonna set a stop loss there, in our entry with the confirmation of in engulfing there, and let's say green for entry. No, we're doing blue for entry. Where's that blue? I think that's this one. All right, whatever. We'll just go green. Okay. So here. Now what's the idea of this? Now the idea of this is that even if it breaks this, right, we still have this trade running long to help us. Now, however, if this trade goes up and breaks this, we're already at. So once the price gets down here, we move the stop here to break even there to protect us, right? So the trade it's a free trade. We cover the commission, everything is covered, so it's a free trade for us. And then now the trade comes back. Now what are we gonna do? And then the price is gonna basically, we're just gonna let it sit, and throughout the week, that's the low of the week, right? No, sorry, low of the day. My apologies. And with that, the idea is to, now it breaks out, and that's how you capture the highest, how you are able to really capture like the movement of the market, for gold. That way you don't have to do 10 lot size trades. You just trade 1 lot size, or you can scale up and scale down, once you have properly identified the highs and lows of the market. So with that, we'll come and watch, and now that you guys get the concept of what the idea is we look at this, right? So we initially set, so again, we entered here, we set a stop loss, we're at a stop loss, right? But no, we're at break even now. Now this is top, so we have an entry of here. That's our initial entry. Now when it's down here, we're gonna move our stop loss. Let's say our stop loss was, no, let's just do this short position. Okay, our entry was here. Our stop loss is let's say roughly here, right? And now we're gonna watch the market. Watch, you're gonna be surprised. So we're already at break even, so we didn't lose any money, right? We didn't lose any money. We protected ourselves because we were properly able to identify the lows. Now that's the caveat where that's where back testing is gonna have to be, where you have to really train yourself on that portion of really truly identifying where the bottom is and top, so that you don't make multiple entries. But as long as you don't set your stop too big, you can kind of re-enter a couple of times. So let's keep going. It breaks that, right? And please note, now at this point this trade is dead, so let's delete it. We have not lost any money yet because we move the stop here to break even, and even if price came down and broke it, we're still at, that was a free trade, right? We're all about managing risk, okay? And broke it, and it's going, and it's going, and it's going, and we're gonna go throughout the day. That's the idea here, is to really try to go throughout the day. Even if it comes back up, it doesn't matter, right? It's stress-free. You place a trade, you have that, you just kind of monitor it here and there, and you just let it go throughout the day. And even if it came back so drastically in a way, you're already at break even. It's a free trade for you, right? Just like, come on, it's a free trade. You already move your stop to here once the price broke here. It's a free trade, right? And your risk reward is gonna be drastic. Even if it comes back up in that kind of a way, it's still a free trade, right? And could be, you're like, if you have conviction or whatnot, you can definitely take it down here. You could definitely try to like hedge it again and try to identify the bottom and kind of take the same mentality where, oh wow, like, I'm letting the trade run, but let's just let it go. And you're letting it go, and you're starting to see price kind of create a new bottom, and maybe it may whipsaw. Then, I mean, you already got profits, so you're just giving the profits back in a sense where the profit came down here. This is all profit, right? And you're like, oh, I could risk some profit on my risk here. So it's hedging against itself, but at the same time, you're applying the same concept. Then when price goes up, move your stop loss here. So you got two free trades coming. Now you're losing money, but also you're gaining money. So it's like, depending on how you want to control the market and whatnot. Now this does not work for every market condition, but for most of the times this strategy works. If you even look here, right? Come here. Just last example, and then we gotta close it up. So come here, we have a stop up here. We just use pink. We stop up here. Get out of the way. Stop up there. Place a sell. Came down here, and then just kept going, right? That's what you got because you took that same method. It did not break the high. It did not break it. So you don't have to worry about that. It's just going down. And now if it broke this high, there's a new thing that you can look at. But that's just basically you caught the whole trade. So that's just the idea of here. I know I kind of ramble a little bit. Hopefully you guys can catch on. I'll try to be more specific, and possibly maybe in the notes, in the comments, or whatever, I will try to share exactly the breakdown and whatnot. But for the time being, that's something I'd just like to throw out there for you guys. And thanks for those who've been kind of watching, and let's go. Let's shoot for 100 subscribers. Like, subscribe, comment below. We'll go at this. We're gonna keep going, dive into gold more and more, and maybe even look at news. So with that, that's all I got. Study up, trade up, and live the dream. Just go to FX Traders. Deuce.